Good morning, good afternoon, good evening, no matter where you're at in the world. I'm Frank Spicer, your co-host of Metafide Spaces. With me, you have Keyboard Yeti, our trusty mod, co-founder Matt Cross, and Big Worm Serge Satora. Welcome to everybody. We got a lot to go over today, mainly about the state of the market and where crypto and Web3 sit. But there's a lot going on. How you feeling today, Matt?
Yo, I'm feeling great today. Another good day at Metafide. We got a crazy 3 months ahead of us, so just trying to kick ass every day.
Yeah, that's right. What about you, Worm? How you doing?
I'm feeling as great as Matt Cross today. It's a pretty good Tuesday, but still rainy up here in Connecticut. Frank, how are you?
That's a high bar. It's been raining down here in South Carolina, but we needed it. So, happy to see it. Glad to be one with nature. You gotta have some rain to get some flowers, and I think maybe that's the theme for where we're at in the global markets right now, because we've gone through a frigid crypto winter, and now we seem to be solidly on the other side of that, where we're on the precipice of another bull run. Maybe not just for BTC, but maybe showing some signs of life for viable DeFi projects. I don't know if you caught the news, but there's a Japanese hotel chain out there saying they're trying to purchase 1% of the global Bitcoin supply, which, in my opinion, is not going to happen. But it's an interesting goal, and I think it's an indicator that people are starting to see. Look, I have to be involved with this somehow. I can't just let this opportunity pass me by, because the way money moves and the way people transact is about to change quite a bit. And Matt and I talk about this all the time, but it's it's not like the markets are serving people, the common person, at all that well. So, just in time, I think, for the amount of change we're seeing in the world, and maybe an opportunity for people to, maybe if not reset, at least find a wedge to get into the market and start to succeed alongside the changes. Is that a viable description, Matt?
Yeah, I would agree. I mean, that's what brought these original people in. They didn't have a market that serves them. They needed something better, so they pursued decentralized finance. And here we are today, developing out all these new layer twos with consumer products and just trying to make everyone's life better. And
Yeah,
we are definitely seeing a large push right now in the US and across the world for it.
and I don't know. I've shared a couple links into the chat here for this. One was about the BTC. If we're going to review the state of the markets, we've seen BTC bouncing up and down between 109 and 110. Just recently, it went over 110 a little bit later last evening. So that was good to see. The all-time high is 111 and change, so we're nearing that. And Trump signed a bill. I shared this link as well, giving every child born 2025 to 2029 $1,000 stock market linked investment account, which would give them indirect exposure to BTC potentially. Because they're going to be able to trade in the ETFs, and essentially sort of sets the table for global adoption, so everybody can have some if they want some. And I think that's a pretty bold move in terms of orienting the U.S. to be able to capitalize on the changes that are coming. It's not something that I've seen anywhere else in the world so far, and I think might be a sign of things to come. The other thing is, I don't know about you guys, but I've been getting asked questions by people about, how to get exposure to the crypto markets from people that I had thought were never going to want to try to understand it. And it's kind of happened all in a wave, and I'm not sure what's changed in the media or the news or where people are getting this from, but it's one of those things where you start to see a pattern emerge. Serge, are you getting any of that from people, like asking you, like, what can I do? Can I own some? Do I have to buy a whole Bitcoin? I know that's a common
Yeah,
question.
yeah, that's a great. And I'm glad you asked me first because I'm kind of in that demographic of kind of what the third wave, if you would, of the kind of the middle of the curve people. who do ask those questions and do see sort of the both the excitement and success of it, and we're too shy to kind of jump in the pool and are asking the questions. So for sure, I get asked the questions. I get asked the questions at the gym by my friends, people in like my networking groups or what have you. So that interest and that herd is getting ready to come in. And I think what you're talking about with, you know, the bill that Trump signed and plus all the ETFs and everything that's happened on the institutional side is lowering the barriers so people can come in. But then the other half of the equation is, do they want to come in, right? So the want is like, you know, making it understandable for them, similar to what Robinhood did for options. Like, how do we do that for crypto? And that's a lot of things that, not to advertise, but that's what we're doing here at Metafide, right? To make it, you know, attainable for everyone to get into it.
No, we love it when you advertise, man. Keep going.
Yeah, man.
I think
I'm Metafide. Let's go.
Yeah, that's right. We're on to something, I think, and you know, letting people transact in the markets in ways that might not be available to them is definitely one of the things that we're all about with the set of products we're about to ship here. And you know, we're getting considerable interest in the games to be able to participate in this. To reiterate something our guest last week said from the Metafide Safe House, Peyton Johnson, you know, he talked about being able to participate in what is essentially, you know, a market that wouldn't be available to anybody except through complex financial instruments. But you can actually have a 1x risk and a multiple X levered payout as long as you contribute alpha to the system. So if you're helping us predict and you're really good at it, then you wind up winning a commensurate share of the value for that position in these games. So we have 2 games about to come out, Spot and Range. We're going to be launching through the Dojo S platform, and we have some others teed up that Matt and I have been working on quite a bit. And the idea is, you know, you can wind up taking part in this AI revolution in the financial markets without needing to be an AI expert, and just sort of your good understanding and intuition of the market. You might have your own models, which we welcome you to compete. We're not trying to keep people out of these things. The concept is, as the markets expand, they should be for the people, at least to some degree. There should be some way for people to win value in that, not just leave it up to the bankers and the big institutions, because that's not a working system in my mind. The other thing that's worth talking about is, once you have this drive for people to acquire a store of value like Bitcoin, at the same time, there's all this global regulation going around stable tokens, and that seems to be opening up. And we've talked about this before, where if you open a bridge one way for money into the system, it also opens a bridge for money out of the system, which I think has been needed to link the two. Because if people think they're trapped in crypto, then it's not as valuable. And people might say, well, there's going to be a bunch of outflows into the system, from the system. I don't think that's correct in the assumption. I think what you do is, if people feel like it's voluntarily interacting and they're not trapped behind some sort of barrier, and it's easier to get in and out, I think that just grows the opportunity for Web3. Because you saw it with the open software revolution in Web 1 as it spread to Web 2. It's not like people, when they realized that things are, IP was going in and out, it wasn't like people stopped contributing. They just built more interesting, better things for people to do, and it wound up improving everybody's life. I think anybody that's ever called a car with Uber or Lyft can realize that that's a better thing than just throwing your hand up on some random street corner hoping a taxi stops for you, right? Like we need that equivalent of financial products, and it's long overdue. I think it's happened quickly in terms of the technical development curve, but I think it's long overdue that people can share in financial interaction. Like it's been walled off and boxed out from people for too long. So Matt, the question that I'm sort of teeing up here is, if the stable tokens wind up becoming more viable, more well spread around, people can have and transact in them, and it lets you load into other financial products for when they're sitting around. Do you think that opens up space in DeFi? And then the follow-on question for that is, do you think that the DeFi markets and developers are ready for that?
Yeah, I would say it opens up a major space for DeFi. Even just seeing, the Circle IPO over here in the US, that's currently at a market capitalization of around $28 billion. And that creates, a viable thesis for fund managers to come into the space. And now that we're going to see more money being invested in the space, it's going to bring, a whole other round of founders who feel legitimized and free to build in the space as well. And that next, round of founders are going to be the people who build consumer products that change the world. And I think getting rid of those stigmas again is really important for the growth and development of this space, because it's no longer seen as, oh, you're, kind of maybe a joke developing crypto. It's saying, oh, you're utilizing, the top technology in the world to gain financial access to these new markets and provide people a better life at the end of the day.
Yeah, that's a great take. And, for those of us that are old enough to understand the way the Web 1 revolution worked, where people started building websites and doing things that were accessible through the web, it got a little ridiculous there for a second. And I think that's sort of when you look back, sometimes you look back at hairstyles and clothes and you realize that they were pretty corny and that was the wrong way to do it. But instead of throwing the baby out with the bathwater and just scrapping it all together, the people find a way, which I think is something we really believe in, that if there's a way for people to make it, if there's an opportunity to be captured, people will find a way to do it. And with the Web 1, and I'm kind of directing this question at Worm here, we saw a phase where you had Alta Vista and Yahoo and some of these companies get what was then pretty big. And then there was a whole bunch of stupid ideas that got funded because people wanted something in that space. And I think it's pretty analogous to the meme token wave that we just went through, where it didn't really serve anybody. People were just using the technology for the sake of using it. And there was some opportunity that, evaporated. But on the other side of that, some of the things that got built wound up precipitating Google, the apps that came out from the web became the app store on Apple and Android. And you also saw, Uber, Facebook, all these companies that got built on top of the layers that got planted in the first revolution. I think we're kind of there in the crypto markets now. It feels like now we're ready to start building companies on top of the infrastructure. And we obviously have a long way to go to make the infrastructure better, some of which we solved, I think, in the release of what we're about to do. But do you remember that, Serge? Do you remember that corny period of Web 1 where you were getting Super Bowl commercials that had no business for companies that shouldn't have been out there? I mean,
CMTI. Yeah. Thanks for highlighting my age once again on this space, Frank. I really
you're welcome, man.
That.
By the way, for everybody should know, we were roommates in college. So back in the last century, Serge and I were roommates in the 1900s.
We were roommates in the 1900s at Boston University, when I remember a professor introducing us to this awesome new thing called Mosaic, where you click on hyperlinks and they take you to other web pages, and we were all like, ooh and ah, by the way, Mosaic's one of the other ones, right, Frank?
Mosaic became Netscape, by the way.
Yeah, Netscape, and didn't one of them eventually become Firefox, I think? Anyway, I think we saw this in both Web 1 and Web 2, and I do remember that in terms of, the magic was all you got to do is add .com to the end, and boom, you have a Web 1 company, and everyone's, fanatic about it. Sounds a lot like meme tokens, right? So token, ooh, I don't know anything about this. I don't know sort of the technicals or what the project is all about, but I want to buy it. So we lived through that exact thing where people were telling me just invest. They didn't even give me the name of the company. I don't know if you remember this, Frank. They just gave us stock symbols. Someone
Yeah.
would just buy BTWG. I'm like, well, what the fuck's that? And sorry, pardon my French, but he's like, I don't know, just buy it. It's like a hot stock. I don't. What's the name of the company? I don't know. That's the stock symbol. So that literally, I'm not joking, was the conversations that were being had in the 1900s. Then Web 2, same pattern all over again, right? So think about like what Friendster, MySpace. Think of all these like different websites where you're like loading, you know, your user generated content that they would eventually own. And then out of that, you know, the lesser but more successful ones like, you know, like Facebook and Netflix, whatever, really capitalize on that innovation. And I think it's happening all over again with Web3. And you and Matt and me keep saying the same thing. Like, look at the project. And I love Matt's sort of quote, like, would you invest in it if it didn't have a token? Because that's the true litmus test in terms of the investment. And that holds true for Web 1, Web 2, shit, the automotive industry in the United States. There was like hundreds of automotive companies. How many are there now?
Right.
A few? Same
Yeah.
thing.
Yep.
Patterns
You
just
eventually
repeat.
consolidate it. Yeah. History might not repeat itself exactly, but it sure does rhyme. Right. And
Yep.
it's actually a trivia lesson / history point here. History lesson, trivia point. Okay. Well, you mentioned Mosaic and what became Netscape, and you know the platform that eventually is baked under Firefox and Chrome and all the other things, Mozilla. Um, a couple things about that. The two major people driving that project, Brandon Ike, who went on to start Brave and the Brave browser, right? That's one of them, and everybody in Web3 knows that. Um, there's if you look online, actually, there's a beef between me and him maybe 8 9 years ago about the use of the concept of attention, because they had basic attention token and my previous company Social Flow in 2011 had coined the term attention economy, and we had universal attention token. uh, but you know, gotta appreciate the guy for his work and contributions. The other major player in that was a guy named Mark Andreessen, who runs A16Z now and is probably one of the biggest proponents of cryptocurrency and what it can do for people. So you want to talk about, you know, how these things all link together. Brandon Ike as the original project owner of JavaScript, and then Mark Andreessen for the concept of bringing browsers to people. Look where they are now. You know, I think if you just kind of take a temperature, they're solidly in the Web3 ecosystem, and they're driving the development and the investment in it. They didn't bail out and go someplace else. They found their way here early, and they're in it. So if you're just looking for patterns and sort of the staying power of this technology in the industry, look at those two innovators from the Web 1 space that built platforms and investments that went all the way through Web 2 to where we are now. And again, I don't like talking about Web 1, Web 2, Web 3, but it's convenient, classifier in this case. I think what we need to do to mainstream Bitcoin and Web3 is make these interfaces cleaner, smoother, less work for the common person, like bridging your tokens and jumping through all these things to auth wallets, and you have this wallet for this chain and this wallet for that chain. Like, I think once that starts to become smoothed out, then you're going to see some consolidation, like you just talked about, where it's not just 100 automotive companies, it's some major ones and then a universe of other companies that are serving consumers around it. I think we're just about there. Anything to add to that, Matt? Because you were an investor in the space prior to joining Metafide, so
Yeah,
you got a chance to see a bunch of this stuff.
I would agree. I think, the investment frenzy that happened in Web 1 and why it looked so similar in Web 3 is because investors know that speculation drives markets. on the, traditional asset side of things, we've seen Tesla do really well off of speculation. On the crypto side of things, we've seen XRP do really well off speculation and creating a great narrative in the market. And I think eventually that starts to wear off, because in the beginning, speculation gets people involved. They're buying this ticker, like Serge said. And then one day those assets are almost disconnected from retail, and you stop having retail coming into those assets and supporting them. And then eventually that wave dies out. And I think that's the phase that we're in right now in Web3 is, we fizzled out, we invested really fast. Some things didn't work because they didn't make consumers' lives better. But now we're able to sit back, look at the industry and say, okay, how can we actually build things that matter right now? This is our chance. And so it's actually a maturing of the space, which is going to bring us into a more stabilized future.
So last week, Yeti was talking about how to get it, was glad to be able to talk about getting exposure to stable tokens. And then the next day, Circle IPOs, right? So you want to know how to gain exposure to the upside of stable tokens. I think buying some Circles, like, probably something I'm going to look into and do more of. So that's one. Understanding compound and convex and things like that, and things where stable tokens are sort of transacted. That's another way to do it. The DAOs that facilitate projects with stable tokens are another one. But my key takeaway from the markets also, with more stable token adoption and more potential buyers of converting their crypto, what I'm doing, and I've always said this, is I'm buying more BTC. I think don't let the institutions run away with it. You got to hold some. And to answer the question I teed up earlier, you don't have to own a whole Bitcoin. You can buy $10 worth of Bitcoin every week if you wanted to. And I think every person should, because there's only 21 million that'll ever be, mined out. So having some of them, if somebody came to you 100 years ago and said, you got a chance to own 0.1% of the world's global monetary supply, or 1/100% of the world's global monetary supply, that would seem like a pretty good deal, as long as you got in early enough. And we're sort of still early enough where you can see the adoption roadmap extend in front of us, and you can see all these financial products coming in the market. So owning some companies that benefit from stable tokens, transacting in pools that give you interest from volume or earnings from volume in stable tokens seem like a pretty good play. And then owning the store of value in the system, Bitcoin, seems like a pretty good play to me. So that's not financial advice, but that's the way I'm approaching it and doing it. Yeti, what do you think about all this, man?
I don't know, man. The IPO was wild for Circle. Hey, it was, like how many X did it do in like the first few hours? People were. So I was hearing people say, "Oh, it's overvalued at its IPO price," and then it's like 400% gains in the first within the first 24 hours, wasn't it?
Yeah, something along those lines. True.
Yeah, just crazy. I don't know. I'm not the analysis guy, really. I try and get my fingers in all the pies just in case I try and, scattergun approach is my approach.
Where are you seeing interesting things to buy then? Like, what are you doing?
So I take your advice a bit. I buy a bit of Bitcoin. Honestly, I'm a bit
not
into
financial advice, by the way, for everybody out there. I didn't give advice.
It's true. It's true. Putting words in his mouth. But honestly, I also buy meme coins. So I don't know if you want to be taking my advice.
I mean, it's fun. It's just like not a long-term strategy. Like, I don't think I'm gonna bank my kids' college on dog with hat. Like, I think, like that's it's fun. Sorry, go ahead.
So
I'm trying to speak to my accountant, trying to convince him that buying fart coin is the best move.
No.
Sounds cool.
What were you saying, sir? Worm?
I'm just saying, like, I'm not going to hate on people, and I said this before, that buy let's just say the Pokemon card collectors, or they like to collect samurai swords, right? And this is just a digital version of that. I'm not going to hate on you for that, but just know that's the equivalent. You're not investing in a company. Just understand that when you do a meme coin, you're not really investing in a company or a project for the vast majority of them. There are some that are trying to, do something, with those meme coins, a la our new friends over at Doge and what they're doing with Doge OS. But the vast majority of these things are like, collector's items.
Yeah, I like to look at things like if it's a cultural glue and connector, and that culture has a sort of a certain view on like the overall future of the industry, then that's great. Like our buddies in the Doge community, with the irreverent way they approach things, like they're not leaving crypto. Like they're in it for the right reason, right? So like those folks, they're in it for the long haul. They're having fun, and what I look at Doge is almost like a cultural, just it's like the tractor that's driving things, and so that's great, but some of these ones that are just they're going to rug when the hourglass ticks out. So I think that's worth separating them, and it's like one of them is sort of like a ride you hop on and try to be off before it comes crashing down and flings the kids out into the fairgrounds, right? Like I think that's one, but if you're taking part in culture and community, it's a way to like sort of sightsee and see your way around and meet people and get involved with stuff that's pretty fun. That's great, and everybody should have fun, but it's at the same time you should build something that lasts and that has utility and rewards people for it. I think if you're doing that, it's going to work. And like Matt said, if it's going to work without a token, and you add a token to it as a way to tie everything together, then that's great. Yeah. So we just have a couple minutes left here. Any closing remarks on the state of the market right now, Matt? Like where do you think it stands, and what do you think comes next?
Yeah, I would say just one of the things to even add all into this is the silver lining between these assets is the narrative behind it. Meme coins, right? Like Dogecoin has a narrative of, this unapologetic community which combined by culture, and they have a belief in a better system and possibly the use of a people's currency. Bitcoin has a narrative of being, a way to trade fair value and do it peacefully and create a decentralized world. And I think one of the important things is to, invest in the narrative that you believe in. And if this is something you believe in and it's something that you can share with others, there's quite a good chance for success in that asset at the end of the day.
Yep. Yeah, the fact that people are still here betting on people long term is probably not a bad way to do it. I think that's if you're looking for thematic investing, like I think that's a good way to say, like, I hope people still exist and people get better. So let's invest in the things that make things better for people. To summarize where we're at, you have BTC becoming more accessible to people. You have stable tokens making transactions more readily available. I also think a consequence of the stable tokens becoming more ubiquitous is they're going to have to be transferable across chains and across wallets so that the experience is seamless, because it's not $1 USDC is not worth $1 until you can trade it without friction. So, it's a discount to the existing currency, but there's enough true believers now that can make it work, and sort of we have the momentum. So as long as that keeps improving in the market, and you're seeing people make things better, faster, cheaper to transfer these things, and put yield products behind it because you have these inflow of dollars, then maybe holding USDC is at a premium to $1 in that regard, if you wind up finding a way to make things better for you. So, I just want to say before we go here, because we got Yeti with us, and he doesn't have to remind me this week. If you want to be involved with the project, follow us on X at @Fide_AI and join the Discord, because we want to hear what you think. There's a lot of fun things going on. There's a bunch of contests, that have launched. There's a bunch of ways to get involved with the alpha testing of the games that we're rolling out. So discord.gg/FIDE-token. And beware of imposters, because we've had people sort of listening and trying to go through and set up fake Metafide Discord servers. So make sure it's the real one. If it doesn't have Yeti and Roaming interacting in there, it's not real. So make sure that it is the real Metafide Discord server, and it is the FIDE_AI X account. You can also follow us on Instagram, TikTok, YouTube. We have a @Metafide at YouTube. So join us there. Please like, comment, share all the stuff if you can. We really appreciate it. And we'll be coming back at you later this week, Thursday, 4 p.m. Eastern time. And thank you, everybody, for listening. We'll catch you on the next one.
Take care, guys.
Bye, all.